Alright, so good morning to everyone. I hope you all had a lovely weekend, and I hope the market did treat you well. It's a brand new week and definitely the last week of the month. It's been a very tricky month from ups and downs. Yeah, but we're able to come through it, and yeah, let's see what the last week of the month has to offer for us. So I'll just give in about a minute or two for the rest of our colleagues to join in into the session. Then we can see what the markets are looking like. In the meantime, I would like to welcome you guys as well from the Jackson Hole Symposium. That was last week on Friday, and the market was pretty volatile. You all saw those candles that came in abruptly during the final day of the symposium. Of course, that's when Powell tends to give his speech and give the investors an idea of what he's probably cooking up for them as well, or what our indicators is definitely looking at moving forward. And as far as this symposium was concerned, there has been a lot of rising tension between, of course, Donald Trump and the Fed, then the economy and rate cuts. And we all know that the investors have been really watching out for that because they have also been trying to align with Trump of late to try and push the Fed to definitely see a way of lowering those rate cuts. So yeah, the market is still pricing in the effect from the Jackson Hole Symposium. And yeah, we're expecting some pretty crazy moves, especially this last week of the month. It's going to be a bit tricky. If you've seen the movements on gold and some pairs from yesterday, still been trying to price in the Jackson Hole effect. That's as important and significant as it has been, especially in the past few days. So we're going to be going deeper into that as we look at the charts as well, and we try to see how best you guys can position yourselves. So first and foremost, in case you're not subscribed, don't forget to subscribe. Very soon, within the next few months, shall be releasing a full breakdown on how you can use fundamental analysis and then align it with your technical analysis to try and look for trading opportunities based on the data, based on investor sentiment. So you want to be subscribed and put the notification button because you don't want to miss out on that video. In a few months, it will be coming out. So yeah, you definitely won't want to miss out on that. In the meantime, I would like to remind you guys, and this is a disclaimer, this is not financial advice, but you're able to use information to probably improve your trading or to learn a thing or two as well. It's entirely for educational purposes. And basically, we'll be highlighting what the market's looking like and how it's most likely going to move through the week. Don't forget to manage your risks. The markets are in very bad times as we speak right now. On the other hand, do not forget to sign up for all our different classes. If you're in Uganda and Tanzania, we do have physical classes happening in Uganda, Rumi Building, Lumumba Avenue, on the 7th floor, Monday to Thursday, 3 p.m. The links are in bio. In Tanzania, FNB House at Dar es Salaam, 1 p.m. Monday to Friday. Do not forget to sign up for them. And those who can make it to the physical locations and those in other locations like Kenya and any other location, we do have online classes. In the morning, we have the 11 a.m. Advanced trading session. Then at 8 p.m., we do have a beginners session, and all the links are in bio. You can check them in the description. Based on what level of trading you're on, they will be able to help you. Very great educators out there, a lot of impactful information. And of course, for the guys who are already engaging the markets, this is where we meet Monday to Friday, 11 a.m. All these times are in East African time. So in case you're in a different location, do not forget that just in case. On the other hand, we do have a trading masterclass for Kampala. We do have two other great traders who will be there to share insights and strategies as well. And that will be this coming Saturday. That's the 30th of August. It will be at Tobani Center. Do not forget to sign up. The link is in the description as well. And those in Tanzania, we do have a trade talk happening on Friday. That's the 29th of August. It will be at our offices at FNB House. Do not forget to sign up for that as well with a link in the description. So with that all out of the way, let's get down onto what the market is looking like today. And first and foremost, what you want to look at is, shall we be having any major news events that may cause some kind of uncertainty, some kind of volatility, that you may either look to get some opportunities within, or even just relax, sip a cup of coffee and just watch the market do its thing in case of volatility. So today is Tuesday, 26th August. And as we can see, we had an RBA meeting minutes that came out earlier in the day, about 4:30 a.m. East African time. So those are minutes basically our investors will be looking for sentiment or to listen to what the Bank of Australia is hinting in terms of interest rate decisions to see if they're doing money injection or money extraction from the public. That was earlier in the day. We did some volatility coming in some major pairs, but it wasn't so significant. Though we are seeing a reaction on gold, but that's not from this entirely. We're about to break down why you're seeing that kind of volatility, especially coming in from last evening to today, why it came into play. It's not because of the Bank of Australia meeting minutes. Later in the day, we have the durable goods orders. These are not so significant, but then we shall get some volatility in it. Usually it tends to move about 40-50 pips. So you can always be in a good trade, aligns with structure very beautifully. So 330, want to expect for some kind of volatility. You can see the previous was 9.3%, the consensus was negative 4%, and the forecast is 2.5%. So in case you're wondering what durable goods are, you can always just click on this. So the platform I'm using is Trading Economics. I always find it a bit more friendly, user friendly compared to Forex Factory. I know that's the classic one, but I feel like Forex Factory looks like a programmer's back end, so that becomes sophisticated. But this is very easy for me. So they're telling you durable goods orders in the US declined 9.3% month over month to 311.84 billion in June, reversing an upwardly revised 16.15% jump in May, and compared to the forecast of a bigger 10.8% slide, the biggest decline was even seen in orders for transport equipments, mostly non-defense aircraft and parts and capital goods, mainly non-defense as well. Excluding transportation, new orders rose 0.2%, and excluding defense, orders edged up 0.1%. Increases were seen in orders for fabricated metal products, machinery, primary metals, and computers and electronics. Meanwhile, orders for non-defense capital goods, excluding aircraft, closely watched proxy for business spending parts, declined 0.7%. So for those of you who have been into trading for a minute, if you remember sometime last year, okay, before this year started or before Trump came into power, the durable goods orders were usually within the middle impact category. But ever since Trump came in with his own Make America Great Again, and is focusing on major industries, so happens to appear that all these major industries is focusing to reinforce, and the ones he's tariffing all lie under what they call the durable goods, or what they used to measure durable goods indexes. We're talking about steel and tubes, we're talking about defense and manufacturing, all these major things they look at, spare parts, raw materials. You have seen things similar to chip makers and things like that. All these are major commodities that run major industries. It's why it becomes so important. So you always want to find a good figure or an increase in durable goods orders. That means people actually buying from the US. So a greater than forecast figure would be something we'd want to see on this, to try and see if the dollar can onset its recovery from the reaction we got from the Jackson Hole effect. That's as far as the durable goods orders are concerned. The forecast is 2.5% and negative 2.5%. We want it to either lower down or come towards the positive side. That will be something very, very important. So on this other hand, I have a headline here. So definitely when you look at your gold chart, you're going to some kind of abrupt spike that came into the market within the last 12 hours. And this is exactly why it came into play. Trump fires Fed's cook. Now, as you all know, the Federal Reserve Bank has about 7 governors that sit on it, of course, with Powell at the helm of it as the chairman, but there are 7 governors. Now, usually, Trump, in his capacity, he has power to fire any of these other 6 when he has a reasonable cause. He has the capacity to do that. Unlike other things, Paul will have to do something very bad in order for him to fire him. He didn't have the capacity to fire Paul, but he has the capacity to appoint him because he appointed Paul in the first place at the end of the day. But as you all know, last week, when they were trying to do some audit on Cook, they found out something. She did have how do I call it, a false declaration on her properties in 2021, and Trump was able to use that to definitely fire her because it's more than reasonable cause for him. She hasn't been transparent, and somebody working for the Federal Reserve Bank of the US, you must be transparent. You must have no tax how they call them. Should have paid all your taxes, made your declarations, and all those things that come with transparency in finance. So now, why this affected the dollar a lot is because when now politics gets involved in the Federal Reserve Bank's decisions, then investors lose confidence in the Fed and the dollar, because the dollar, or stabilizing the dollar, is the work of the Federal Reserve Bank. So when Trump came in and fired Cook, that means that he did a political move, of course, though with a financial angle as well. That's why we see the investors reacting negatively on the dollar, and we did see gold give us that spike to the upside. We also pairs like GPJPY get affected directly from this major headline. So that's why you're seeing that kind of volatility in the market. So in terms of Trump, we have been telling you time and again. I think everyone from FX Space has been telling you, from Rufus, Jesse, they have always been mentioning that during this period of time, you want to just keep watching what Trump is doing. What is he pushing for? What is his next move? You know, we don't have Truth Social in Africa, but at least there are a site on X where he's going to repost or retweet these same things that he takes on Truth Social, because that's his first social media he uses to make some of his decisions. He makes decisions online. That's the crazy part about the Trump regime. So usually when now Trump fires a cook, that means he's going to appoint somebody who's going to meet his policies in place. Now that means that the investors lose confidence in the Fed, in the Federal Reserve Bank. Why? Because now Trump is putting in his people. When he fires, if someone retire a few weeks ago or resign, now we are seeing Cook going off that took off the panel, and now we are seeing he's definitely going to replace Cook with someone who will push his alignment in place. So this is basically why the volatility is there in the markets. I just wanted to explain that quickly as well. So on the other line, something I really wanted to push to probably talk about is gold. Of course, gold rises for the second week in a row. Would possibly hope to see probably at 3,400 somewhere in between, which is about our all-time high we have seen. So I think gold prices rose to around 3,370 per ounce on Tuesday, reaching its highest level in 2 weeks amid heightened political uncertainty after Trump fired Federal Reserve Governor Lisa Cook on Monday. Trump announced on social media that he was removing Cook, citing his administration's allegations of mortgage fraud. She didn't do a declaration of all her properties then, 2021, a move that has fueled concerns over the US central bank's independence. So I've been telling you a minute ago. Our investors will always on the Federal Reserve Bank or the central bank being independent from political agendas. Meanwhile, Fed Chair Powell last Friday signaled a possible rate cut in September, highlighting growing risks to the labor market, but also noting inflation remained a threat and that no decision has been finalized currently. Uh, Markets are assigning 83% probability of 25 basis points rate cut next month. On the trade front, Trump reportedly threatened to impose 200% tariffs or something on China if it does not export rare earth magnets to the US, putting the fragile truce between the world's two largest economies at risk. So right now, there are things that are trying to push the market. Why I'm speaking of looking at 3,400 on gold as well because of that. I want to speak something on oil here, then we get into the charts. So as I was saying that some of the major factors affecting gold right now, from of course Trump firing Lisa Cook to of course Jerome Powell last week mentioning that they were going to now cut rates finally after Trump's long they may most likely, it's not even finally, they may most likely consider cutting rates. Remember, the idea is that out of the 7 people on the governor of that govern the Federal Reserve Bank, they vote. Then the ones who have the majority vote and the majority reason are the ones who will have their rate cut or their decision taken into play. So if Trump has already has probably replaced 2 people, or is going to replace 2 people with people who will push his agendas, that means he's probably putting people who are pushing his political agendas into the central bank, which lessens its kind of confidence as well. That's one of the reasons was why we are seeing the investors trying to be a bit protective. They're trying to sell that dollar more and trying to go into gold because they are not sure of how uh, Trump's involvement or Trump putting people who are going directly push his motives will actually affect the economy going forward or the Federal Reserve Bank's decisions. So what will they do? They will run to a safe haven. And our safe haven definitely is gold because gold appreciates over time. That's why you're seeing those that push to the upside on gold. The dollar tries to recover, but then this is uncertainties. Now we are seeing the stance between China and the USA may most likely come to an end based on one of Trump's recent posts where he mentions he's considering a 200% tariff on China if they don't start giving him rare earth minerals. We know Ukraine already gave him that deal, but then they may not give them enough rare earth minerals to actually finance all the major industries that require these rare earth minerals. So that's one of the things that you want to be looking out for. So on the other hand, oil, WTI crude oil futures fell to 64.2 per barrel on Tuesday after hitting a nearly 3-week high in prior sessions, with traders closely monitoring developments in the Russia-Ukraine conflict. Monday's rally was fueled by concerns of supply disruptions after Ukraine launched drone strikes on Russia power and energy facilities on Sunday, while the US President Donald Trump also warned that further sanctions against Moscow could be imposed if no progress is made towards a peace deal within the next 2 weeks. Traders are also watching the impact of an additional 25% tariff on India over its purchase of Russian oil, set to take effect on Wednesday on the demand side. Expectations of lower U.S. monetary policy offered as Fed Chair Jerome Powell on Friday signaled possible rate cut in September, which could boost economic growth and energy demand elsewhere. Attention is also on the API's weekly crude oil stock data due later today as well. So we have this coming in, but it's not much impact. What happens is that these are called leading indicators, right? So one day we shall talk about indicators in depth, but leading indicators that investors look on to forecast a future decision. So like it happens, the API comes out a certain way, then our investors now start thinking of what is the Fed going to do? What is this going to mean for power buying oil tomorrow? So that's why they never have high impact, but their long-term effect is always felt in the market. So besides that, that's just the major fundamental drivers we are having. I think it's about high time we try to look at the technical analysis side and we try to align with the current fundamental space that is into play. Because I believe one of the challenges we tend to get a lot is trying to align the fundamentals and technical analysis. It's a very big challenge. It takes quite a minute to get used to it, but eventually you do get used to it. So let me just share my MT5 in a minute. In the meantime, do not forget to sign up for the Traders Masterclass. If you're in Uganda, Kampala, it will be happening at the Tobani Center on the 30th from 10 a.m. to about 2 p.m. We shall be breaking down our pure price action strategies and giving you some very, very important tricks on how you can navigate the markets in your daily, day-to-day trading activities. So just a minute, I share my chart. All right, there we go. So of course we did see a push on Nasdaq early last week when we saw the anticipation that the AI bubble must have burst. But as usual, we tend to like pushing in from the dollar index. Gives us a bigger picture of what American investors are looking at. Being the world's global reserve currency, you want to pay more attention to what the dollar looks like. So I always start with it. And we shall be kicking off from our daily time frame. So as you all know, we have had this support level for now, I think 3 weeks. Every time I come, we just have to mark it out to remind ourselves. For those of you who want to see how we have been anchoring around this support level here, or this it's actually a demand level on a 4-hour time frame, but I call it a support. Demand is support for me. You're able to go back, just go to the playlist section, go to the market snapshots with Emmanuel, look at the past 3 sessions we have had. We have always marked out this, and we always mentioned how our price gave us a breakout. We anticipate a retracement, pushing back into this level, then a push to the upside. Market is pretty much the same way. We had this big sell-off coming in from the Jackson Hole Symposium. Of course, what happened is that when Powell hinted at a possible rate cut coming in September, people who are investors or people who invest in the economy, they were happy because then they're going to have lower rates. They'll most likely have lower rates, which means they can borrow. The cost of borrowing becomes cheap when interest rates are lower. They can borrow and then invest in stocks. That's why you saw the stock market go up. But on the other hand, there's a fair portion of investors who thought that, okay, now maybe Powell is yielding to Trump's pressure to cut rates, which is basically, that would basically mean a political involvement into the central banks, policing moves. So for them, what they did, usually people would call this a sell-off, but sometimes a sell-off as well as a money extraction. They remove their money from that currency index and put it in a safe haven, which is gold. So we saw this big push to the downside on the dollar index, and relatively you could see a very big buy up on the dollar on gold. Sorry, you could see a very big buy up on gold at the same time. So as I was mentioning, prices give us a retracement, then give us a push to the upside. We have had a bit of hard time breaking above these previous levels on the dollar. This price level is probably about 98.960. We have had hard time breaking above it. It's 98.829. So we still hope to see a break above this area, then price could consequently continue pushing to the upside. We are still pretty bullish on this. We know that the economy may definitely recover. By the economy, I don't mean the Uganda, Tanzanian, or the dollar. The Ugandan economy or Kenyan economy or whatever, but then the American economy definitely. We would want to look for a break above these areas because this support level, this resistance level has also proved to be strong in the past few weeks, probably about 3 weeks. Throughout this month, we have seen this area being a bit so strong. So we want to see a break above this area, then a push beyond these areas over there. Definitely take out these highs that we had all there from July. as well. So remember the push above this came in from the trade deals that Trump was announcing throughout July, the Japan trade deal. I think we had one also on with the European trade deal as well. They fuel this push to the upside. Then later, then now we got into a phase of him tariffing China, India, sorry. Then we started seeing this push back down to the downside this month, but you're still seeing a push to that upside as well. Coming into the 4-hour time frame, price hasn't really given us any major kind of breakout in the 4-hour time frame. We are still trying to fill up this imbalance or this gap that was caused from Powell's speech at the Jackson Hole Symposium. Though we still do have a whole zone, this can still work as a supply zone as well. So we can easily see some kind of retracement on a lower time frame. This is a 4-hour time frame. So we can easily see some kind of push to the downside when price gets into this zone over here. This whole is just an area of interest. We could say as fair push to the downside before price definitely sees if it can break above, right? So the best buying areas as of now where the market is looking at would be basically demand levels. And right now the only clean demand level we do have is all the way to the bottom here. It will be our best possible buying level in case price actually is able to retrace this low here as well. This would be a very best opportunity to look for some kind of buys. Then within this area, strictly of confirmation, you may want to think of sales. I highly don't advise that, but depends. Probably if price in the zone and then you hear Trump going crazy as well, probably putting in some more tariffs or mentioning something crazy, then you'll definitely see that sell off to the downside as well. But as of now, this is how it's pretty much looking like. We are still set for a dollar recovery, as especially now that Trump has been able to align most of his goals with the Fed. If they're looking at trade cards, that means they're starting to align themselves one by one. Of course, this sell-off becomes a panic sell-off when people are thinking that probably Jerome Powell is yielding to political pressure. This is what you call a panic sell-off. It happens in the market time and time again, especially on currencies, gold, Bitcoin, and indices like US 30 and US 100. We tend to get panic sell-offs once in a while. So this is what we're looking at on the dollar index. And remember, we use the dollar index to gauge dollar-related pairs, except gold. I keep mentioning except gold, because gold doesn't directly correlate with the dollar index. Especially since 2021, it does not directly correlate with the dollar index. So of course, if you're anticipating a buy up on the DXY, that means we're anticipating a sell-off on Euro USD. So we are seeing that last week wasn't the best for the Euro. The Euro was doing this quick recovery here to the upside. But when you look at your line chart, we did have a breakout to the downside. Let me just have this here clearly so you can see this. So you can see from this box tool, we did have some kind of breakout or break of structure within this, as you can see. Price giving us this high, then a lower low. So when I come back to my candlestick charts, you know that when price gives you a breakout, it's usually most likely going to come back into this zone to try and continue pushing to the new direction. Also, this is a weekly time frame. So going out to the daily time frame, what do we see? We did have a level right over here. I think on a few sessions ago, I did speak about the QM level or the Quasimodo level, and it said it's kind of like a head and shoulder. But basically, some people call it a strong high and low. Other people still take it as a head and shoulder, but this is what it looks like. It's one of the major important patterns you want to learn to look at in the market. But remember, you don't just trade a QM level, you use it as an area of interest or an area that can act as an anchor to anchor price to a certain direction. So this is what our QM tends to look like. You'll have this level, it's always called the QM level. So price forms a high, a low, a higher high, then forms a lower low. Then this area that been like the left shoulder, it now becomes your Quasimodo area, and you expect price to come and give you a reaction when it gets to that zone, usually. So that's our Quasimodo. That's our Quasimodo level. So price came into it, gave us a reaction the first time, tried to push to the downside, but it failed to give us a clear break of structure. We didn't have a good candlestick closure below this area to give us a proper break. But what we had was a demand level that actually held price. From here, we did have this demand level that acted as a strong demand level. Then price came back all the way to the QM level, and it now looks like it's pushing to the downside. So let's come down to lower time frames and try to see what price is definitely giving us. So you're going to look at this structure. It's a bit similar to what we are having on the dollar index, but just inverted, as it should be, because they are inversely correlated. So that was the level we wanted to take out. So price gave us this demand level over here. For those of you that do remember the last session we had last week, we did mention how this demand level is definitely going to anchor price to push to the upside We had this demand level in our last Tuesday's market snapshot and held price off beautifully, pushed all the way to the upside. So this was the level we were watching last week. So price came to it and pushed to the upside. Now when price is coming back to the downside of this QM level, it doesn't give us any kind of like market structure shift to the downside, but what it has offered us is some kind of a supply level right above here. So you can see it's a breakout area that price could as well easily get back into, but then we also have this a kind of demand where you can expect some reaction. So you're going to realize that the movements here are a bit similar to what we are seeing on the dollar index, but they're just inversely correlated, right? They're inversely correlated. There and there has a similar structure, but to the buying side. This has a similar structure, but to the selling side. So you can see from here, we have this demand level instead. Price didn't break about. The structures are exactly the same, just inverted. So we have the same outlook. So you can have similar aspirations. So price definitely gets to an area of interest. The areas we have marked out are just areas of interest where you can look to take a decision. Price gets into them, you price down to lower time frames, look for a good confirmation pattern. Then you can be able to use that kind of zone to probably take a trade or two as well. So that's what we're having there. Then just a second. That's what we're having right about there as well. So of course, alternatively, you need to be fluid with the market. Market can decide to break below these areas, give us a nice retracement back into probably the New York session, and then definitely you can look for that push to the downside as well. You can look at something like that. You can look at that kind of idea when it comes to Euro USD. So now let's move a bit to GBP USD and see if we can align the structures. If it has a much more clear structure, usually where I do both EU and GU is because they have what they call, sometimes they do what they call a divergence, whereby one gives you a complicated structure and the other gives you a much more clear structure that you can use to take proper decisions. So coming GBP USD on a daily time frame. So you can see here price had also failed to create a new lower low from this area here. It just gave us a week between it, but didn't give us a good breakout. Then it gave us a nice supply level right above here. That price actually from that Friday momentum came into the supply level, started pushing to the downside. So yesterday we had a very bearish day on GPUSD. If you notice carefully, now here we're having a much more clear structure compared to Euro USD on the daily. If you can see this. So you can see here, these motion areas aren't so clear. Price even wicked above this area, but then when you come to GPUSD, the structure is so clean. Price comes supply levels trying to price to the downside as well. So going down the 4 hour, now the 4 hour structures look a bit more similar. So you can have the same outlook. So yeah, you're going to notice that price hasn't reached this breakout level yet. So it can still act as a draw on liquidity to an area of interest that you can want to see if price is going to be able to push towards. Now this becomes very important as well. When you look slightly above these areas here, we are seeing this kind of push to the upside. Definitely price can come all the way to this supply level here that is actually fresh or unmitigated, and definitely look to sell while targeting this area as well. This is also an area of interest. You may probably look for buy confirmations, but right now you want to drive with the sentiment aligning on GU and then Euro USD and definitely the dollar index. So you can see a push to that area and definitely kind of like a push to target this area. This can be some kind of good intraday opportunities. Other than that, in case price fails of our confirmation within that, you're going to realize that you have a very clear supply level that's right above that, nothing above that. That's an area of interest. You can have this clear supply level, and in case price fails of our confirmation here, you'll have this whole area or this high acting as what they call your inducement. This can act as your inducement, and usually when you have an inducement, price will look to sweep the inducement, get into a PDRA or an area of interest before it now gives you a confirmation to push your desired direction. So this is something you may want to look at as well when it comes to GBP, USD, or what fancy people tend to call cable. So yeah, some of these pairs have fancy names. People that trade Euro USD, a fancy name for it is fiber. Those that trade GBP USD, the fancy name for it is cable. With gold, I just call it the yellow metal. I don't have a fancy name for it. I haven't discovered a fancy name for it yet. So this is GBP USD and Euro USD, and this is how they are looking like right now. So we come to gold. Yeah, man of the hour. So gold, as I was mentioning earlier when we were looking at the fundamental breakdown, it's something where I would like to definitely try to see if we can be able to get uh, price pushed to 3,400, and just entirely based on the uncertainty in the market. If you're going to notice carefully, gold has been in some kind of wedging pattern or a consolidation for quite a minute. It has been so indecisive for quite a minute. So we're going to look at something. These are the highs we have. We have this kind of trend line area. So if you can see it all the way from this side, the high is actually this side. So you can set kind of a trend line. It's kind of not steep. It moves, how would I call it? Slanting, something of the kind. So then from down, we see a similar thing. So it's in kind of a pennant. I don't know, they call them pennant hedging patterns. But anyway, that's the whole thing we're having with this we're having with gold, right? So on the other hand, what we want to look at is that probably price comes all the way to 3,000, actually 3,500 that we may be targeting. It's the previous highs that were 3,436 around here, but you can see price push all the way to the upside, just in case price able to break above this intermediate high. Where I would focus on this is because after this high, I have no major area of interest on around these other previous highs. So not every high is going to give you a trading opportunity. It's going to be specific highs that meet specific conditions. So let me give you an example from this one here that we are looking at. So you're going to realize that before price comes to the downside, it forms that up pattern we spoke about earlier on, the QM pattern once again. And I told you it's a very significant pattern, just in case you know how to identify it. So price comes, this is the low. So price gives you a breakout to the downside. On the other side, you have the BMS to the upside, right? So price comes, forms a high, low, higher high, lower low, giving you some kind of an inverted head and shoulder. So what do you know that this level here will be your QM level, where price may probably be looking to come to, and then definitely give you a confirmation just in case a price does that. So this becomes what they call a strong high. This becomes a strong high, and sometimes you'd expect it to definitely hold price occasionally. So we have this level here. So you can refine within this zone here and see if there are any other major areas on lower time frames, because of course you won't be trading on the daily time frame. As an intraday trader, you may want to do some kind of refinement. So let me just mark this out with a box tool. Let me mark this out with a box tool as well. Get rid of this. Oh, sorry. I want to get rid of the trend line, but it's not going. Oh, trend line there. So let me have the box tool back on. So this is our box tool that we are having. So this is the last area of interest I'm looking at right now, just in case. Then I can now have a much more recent price action trend line. This being a daily time frame, I don't necessarily need to get a trend line from five months back or whatever. I can focus more on the most recent one as a retail trader. So you see that if price breaks above this trend line and breaks above this whole zone, we can have a retest of either the trend line or the zones that will be formed within this zone here. This is a wholesaling zone. Then probably push to the upside just in case price does that. So breaking down the time frames a little bit to a 4 hour, I want to look for the most recent supply zone or area that price offered me. So when I look carefully, now this is where it becomes tricky. When I look carefully, I don't have like what we call a clear demand zone, but I have something that would look like a QM level here as well. If I zoom this in, to that peak there, or that strong high we had, you're able to notice that price comes, forms a high, forms a low, forms a higher high, then breaks to the downside, giving me some kind of QM level just around there that I can probably be wanting to watch price to come out to. So now above this, I have a supply level out here. That's just an area I'll be wanting to watch, and can act as my drone liquidity, just in case price fails to give me a confirmation around here. Price can then push that area. Remember, these are areas of interest. So what you need to focus on is having the right areas of interest and knowing that when price comes to this area, I'm definitely going to look to pricing based on a confirmation. That's why they are called decision levels. You don't want to be trading blindly. That is very, very dangerous. Very dangerous, very risky. And yeah, it can lead you into a lot. So as you can look at the price action from yesterday, so this is why I always emphasize learning market structure. So you can see this price did give us a breakout the first time. If we look at the push to the upside, and why I'm actually still bullish on this, I know that this area is there, but price most likely not going to respect it. It may give me a retracement into an area where I'll look for buys particularly. So here we had a breakout. So price formed a new high, gave me a nice retracement. Then price gave me a breakout. And after a breakout again, price gave you a nice retracement to this area here. For the guys who have been into some of the advanced classes and some of the mentorship classes, I've always told you guys that when price is forming a structure, there are two forms of retracement it's going to give you. The first one is if I have a breakout, of this nature here. So let me just let me get a clear place, then I can illustrate these. These are very important tricks you can use to your price action and try to have a much more easier approach when you're trading market structure or trading any market, because every other strategy you're going to come across is entirely reliant on market structure, because that's where they're all derived from in the first place. You can never bite the hand that feeds you. So market structure feeds all the strategies, all the concepts you're probably watching wherever you're watching them from. So if you want to do away with it, then you're in for a long bus ride. You don't want to definitely leave it out. So when you have two structures, I'm going to just use similar structures of this nature, and they're all breakouts. What happens that price has two ways. It's most likely going to offer you retracements. One, to either retrace towards the breakout area or to retrace back into this whole zone. Remember I told you the whole of this area. You can call it an area of liquidity, or you can call it a whole demand zone in terms of a bullish breakout. So price will either retrace here before it gives you this push to the upside, or to retrace into this zone, then look for some area of interest and then buy to the upside. It's one of the two ways. So here you can notice that price is offering us, first offered us the second way here. This one where it comes back into this whole zone here, then pushes to the upside. Then on the second breakout, it offers us this exact thing. The breakout level is what it comes back and respects. So we tend to classify this as a different bullish trend and this as a pure bullish trend. The pure bullish price will break out, then come and retest this exact same area. The different bullish price will break out, then come into this whole zone to look for an area of interest. So here we can say the first time it breaks out here, it comes back and gives us a different bullish market condition. The second time, it comes at exactly the breakout level and pushes to the upside. So it's what you can tend to look out for. When you look at the most recent price action, what do you notice again? I want you guys to see how often this happens in the market. We have a breakout, price gives me a retracement into this demand level, and it's giving me a good reaction. Usually when you refine these reactions, you find yourself with a good risk to reward and a minimized risk, especially if you know how to take confirmations. So this is one of the reasons why I'm very, very bullish, because price is now giving me a good factoring of higher highs and higher lows. You can see this shift area, high, low, high, low, high, and it's forming another new low within that. So it's something you want to watch out for heavily when it comes to trading with market structures. Very, very crucial as well. So this as far as gold is concerned, I'll be expecting a push to the upside. Right now, price already respecting this area. On lower time frames, you can look to see we have no clear confirmation yet, so you can still see some kind of push to the downside. Just in case this happens, I would want to be looking at these QM levels where I would want price to come. Then I can look for a 5-minute confirmation. Confirmations can come from indicators, they can come from chart patterns. They don't really matter, as long as you know the areas you're watching out for. So I'd want to push to these areas, then it'll give me a confirmation. In case I'm to continue with a trend or price doesn't necessarily come back to that area, what will I be looking for? Let me just get rid of this. What will I be looking for? So I can say I have highs over here. I have these highs over here. This is the best high for price to break then retrace. But someone on the other hand would say you'd want to see a candlestick closure above this strong resistance here. I wouldn't call it strong because a 30-minute resistance. I don't really trust a 30-minute resistance level like that. But definitely if price breaks above here with a candlestick closure, we still have a good demand level here and good QM levels that price could retrace to before it consequently gives us a push above these highs. That's entirely what I would be looking at as this market's concerned. So you want to be pricing yourself around those areas. We can even try to refine this just in case. We can decide to refine this. This is the QM zone. So as I refine my QM zones, because I'm going to take confirmations off of them, it's a QM zone. Then below here I have a QM zone. There's a good demand level with a nice fair value gap. So you can also watch these areas as well, from this fair value gap to this demand level. That's another as whole QM zone. The left shoulder will be over here. So you can also be able to look at this as well. So this is something that you can always look at as well, just in case. So in case price breaks below both these areas, just in case, I highly doubt that's going to happen. Based on market sentiment and the structures I'm looking at, I don't see that happening anytime soon. But just in case price does that, we have a very beautiful range below here, and our range is looking like it's about 218 pips. So when you have a range of 218 pips, and you factor in confirmation and then some move price would have done before confirmation, you're definitely going to get about a fair 100 pips or even plus, depends on how well you refine your confirmations as well. So that's something you definitely want to look out for. So this is what I'm looking at on gold, either break above and a retracement, then push to the upside, or on the other hand, we could have a price just coming all the way lower into this QM zone, give you a confirmation. This is a 30 minutes, so I'll be taking a 5-minute confirmation. Me as myself, you can have a different confirmation pattern or a confirmation pattern that you feel you're more comfortable with as well, that you've practiced over time. Very, very important. You need something that's proven to actually work. You need something that's proven to actually work, then you can be able to definitely price that in. So this is what I'll be looking at as far as gold is concerned. These are the areas I am watching heavily and I'm highly invested in on a personal level as well, right? So that's what we shall be seeing on gold. Let's move a bit onto our JPY, and you have JPY. A personal JPY is one of my go-to currencies, especially when I'm feeling like the volatility on gold is kind of crazy or it's untamable. Then I tend to run and drift to JPY. It gives me beautiful structures. It's heavy enough for those of you who know what I mean. It's heavy enough as well, yeah. So here, what do we see? We fail to have a clear breakout from here. We have a candlestick breakout. It's a 4 hour. Let's start from the daily. The daily will give us a much better perspective on this, yeah. So right now we did see price breakout from over here, and kind of giving us some kind of how would I call it? Some kind of correction move, right? Correction move or pull back to the downside. Now with these moves, usually for the guys who have been to the physical classes, here we have spoken about one of these areas of interest called hidden formations. Why I call them hidden formations, that on one time frame, we just see two candlesticks going to the same direction, but on a lower time frame, or when you skip a time frame lower, you'll find here either an order block or a demand level, or you'll find there an area of interest. Usually they're either order blocks or demand levels. They're pretty much the same thing, but that's just it. So when I come to a 4 hour time frame, remember that was the daily, you're going to find a hidden formation that price definitely offered. And this was it. For those of you who were in some of our classes a few weeks earlier, even I think even here I did break down how to identify high probability demand levels and or order blocks and supply levels. Like there's a criteria that personally I follow that I find more effective demand levels and supply levels. Because definitely you're going to find very, very many kinds of demands and supply levels. There are always very many kinds. Now you find that I have a breakout here, but I have 1, 2, 3. There's this fourth one here. But then price won't necessarily respect all. There are conditions that we do have that we tend to use. So the guys who have been coming here, the physical class, we have looked at 3 variations of, let's call them order blocks or SND levels. We have 3 variations. And then, for example, in this example here, in this chart we're having right now, you can easily see up to about all the 3. We have this was our third type here, and price did come and give it a nice big push to the upside. Very good pips there. This is a 4 hour time frame. So it would have been a very nice area of interest. We have this one here, which is a beautiful engulfing pattern. Price did come, give us that push to the upside. We have this that is still fresh. And that's just about the 3 types actually. You realize all the 3 types are in one example. Very, very beautiful. So the idea is that price did mitigate this demand level, but when mitigated, it failed to give us a break above. So when price fails to break above that area, it's definitely going to give you a deep retracement and to try and look for enough liquidity that it can use to later come back and push and break above those highs. So it becomes a failed breakout on the more recent price action. This over here is a failed breakout. Price only attempted to break out but didn't have enough liquidity to do so. So it pushed to the downside. Now, when you notice what happened here again on that push to the downside, of course, this was the effect from Friday I was telling you guys about that we did have a Jackson hole and it affected GPJPY in a way or two. We had this push to the downside. Sorry, this was yesterday actually. The Jackson hole was this other one here. Then we're having a correction from yesterday. So this was from yesterday, or is it rather the morning? It was yesterday evening, yeah. Yesterday evening when we had this push to the downside in the New York session. And what I'm going to notice that it gave us a breakout right around here and give us an attempted breakout from here. So usually what price did, it gave us a whole zone that becomes a supply zone here. This is our supply zone that we can have from there. So price came and wicked into it and it's now pushing to the downside. Once again, it gave us another breakout from here and then attempted breakout from here because this buy came from a demand level here. Are you noticing how the demand and supply levels are working hand in hand? Some supply levels are sponsoring the sales, demand levels are sponsoring the buys. So usually price will have beautiful alignment. That's why I love this pair so much. It just tends to give me some of the most beautiful opportunities. So realize when price coming to the downside, give us a nice beautiful engulfing, which is one of the types of supply levels we have looked at. That's when you always tend to look for lower time frame formations from zones that you can probably see. Price give you some kind of interest. So price comes to this area here, or that sell zone, then you can look for a 5-minute confirmation that definitely later offered before it pushed to the downside. So right now you realize that price also left you with a breakout after that first area that it's currently in the process of respecting over here. So this is the zone we are having and had nice demand levels here. So this is a third type demand level on the ones we looked at. It's for it to comprise of 3 candlesticks. So price came back into it, pushed to the downside. Definitely you look for 5-minute confirmation, try and see how best you can capitalize on that trading opportunity that market would have offered you. Then, so you can see this, we have a fresh one right in there that price anchors price to the downside. So what I'll be looking at on this pair is definitely price to push lower. So I would really love to look at price to push lower, probably into these zones here, but price partially mitigated this, but this would be my target generally. So price already given me the first breakout to the downside. The first breakout to the downside, which is this over here. And you can see how beautifully that candlestick closes below that low there. Closes in nicely. So you can have that. Then now what you're looking for is continuation of breakouts. Probably price comes and gives us a breakout from here, then retraces back into a higher time frame supply level before it continues pushing all the way to the demand level that we're definitely targeting, or that's currently acting as our drawn liquidity as well. So I'm going to just look at NASDAQ, then we shall get into a few of your questions before we can call it a day and wait for what the market definitely has to offer moving forward into the week. Of course, you know that this week is also very important because next week is definitely the non-farm payrolls, the most loved news event for some reason. The non-farm payrolls shall be having them next week after this week is done. So that's one of the reasons why this week you need to be watching what the market is doing, what structures it's forming. Those will give you a good idea on what to anticipate for in the non-farm payrolls. So let's come down to the daily time frame as usual, and then see what we can be able to come up with. So on the NASDAQ or US 100, we did have what we would have called a panic sell-off. Of course, the idea was that with the AI bubble be bursting or something of the kind. So we did see that panic sell-off come into the market sometime last week, and it was very, very aggressive. You can imagine this is a daily time frame, but just like 1, 2, 3, 4, 5, 6, 7 days. So last week plus the week, 2 days from the week before, Wall Street was just they were just shorting NASDAQ, probably hoping that the AI bubble would have burst. This was all triggered starting with the earnings reports from some major companies and the anticipation. If wars escalate, this will either react or suffer still. We saw that during the Iran-Israel conflict, where instead of people thinking of buying gold, gold dropped and Nasdaq just came all the way to the upside. You know that this push from all the way this low here, all this was sponsored. Let's see from 12th, all the way from around 12th. This was around 10th, 11th, 12th. From around this zone, this push was initiated by the Iran-Israel conflict. Why? Military tech was the most sold commodity, and of course, the fact that Trump woke up and used his they're called the B2 jet bombers, those $2 billion jet fighters of his, to go and clear out the nuclear facilities in Iran. That means investors were just pumping money into military technology, which helps Nasdaq push. So right now it's military tech and then AI. So this sell-off here was triggered by a panic sell-off on AI stocks that pushed this to the downside. But of course, after the Jackson Hole meeting, we did see all those stocks definitely recover. We did see even Nasdaq itself get some kind of confidence. And of course, it was pushed by a fundamental event. I don't know whether you'll notice that this up push to the upside actually comes off a demand level. You see this? It comes off a demand level. The price offer does a breakout from here, then give us a deep retracement. Remember I mentioned earlier the two types of retracements price will offer after breakout. either one at the breakout level or one inside the level, and should I look for order blocks or demand levels in terms of the bullish opportunity. So price did this and then gave us this kind of retracement to the upside as well. So okay. So when you come down into a 4 hour time frame when you're trying to what price is trying to do, hopefully we want to see a recovery. My general target would have been the supply level here in case of that push to the upside. Because now I'm looking for decision levels. We are waiting for Wall Street to fully assess the impact of the Jackson Hole or what Powell hinted on generally during the Jackson Hole in terms of rate cuts. Remember, if he starts pricing in trade cards, you know that NAS 100 will actually shoot to the moon because those rate cuts favor industries, and one of the major industries is going to be in technology. That means these people can go borrow money from the central bank and reinvest it into these tech stocks. So all other investors would want to buy early into these stocks just from the fact that Apple would hint on, or we shall keep getting clarity on whether they are really considering a 25 basis point rate cut in September. That will do so well for the stock market, and we shall start effect coming onto Nasdaq and are definitely replaying. Even US 30 will be the same exact case fundamentally. Of course, price will still push from technical levels, or it will drift towards technical levels before it definitely starts giving you that footprint of institutional involvement. So we are saying this. Right now we have our intermediate breakouts. These are 4 hour time frames. So of course we have this breakout from here, then a breakout. There are two breakouts, two highs taken out, which means it can easily be a strong level. But when you zoom in carefully, you're going to see a demand level that price lifters that could definitely use, right? That could definitely use to push this area here. So you can see this demand level over here with a nice breakout, nice fair value gap. It's one of the types I've given out in the classes we have been having, and it's a high probability kind of demand level. Remember, these demand levels are consideration levels, right? You want price to get into it, then you can definitely factor in a confirmation pattern, then definitely take an entry based on your confirmation pattern or entry. And of course, you'll look for it on lower time frames. So this will still be my draw. Regardless, in case price gets to this level, I'd expect some reactions to the downside. Hopefully, they can get to this level. That's in case price goes there first. Hopefully, they can get me back to this demand level. Then I can start looking in for those that push to the upside. On the other hand, I would still want to look into price just giving me a retracement over to this area and giving me a good confirmation to probably push price to the upside. That would be something I would want to look at personally. There are two perspectives I would be looking at as far as NAS 100 is concerned. Last week there were panics that price would definitely push all the way to 20,000, but after Jerome Powell came into the picture with his hint on possible readjustment of their policies, then definitely we may not see that 20,000 level being hit. We shall just see probably a new all-time high, especially in September, if that's the way forward, or if that's the sentiment around all these things. Remember at the beginning of the session, I told you what they call leading indicators or leading fundamental indicators. And these pitches we tend to see, sometimes you'll find that they don't have a 3-star rating or anything. They don't have a figure attached to them, but it's because they are leading indicators. Someone just come and tell you what the Fed is thinking about. Are they thinking of pricing in our rate cut or anything of that sort? And then investors react to that. It's a central banking policy called forward guidance, and they use it to try and help investors take decisions, of course, within the market. So other than that, I'm going to get into a question or two. Then we can definitely see how the market price is in. Do not forget, we do have classes, both Zoom classes for advanced traders, 11 a.m. every single morning. The link is in the description. We do have a beginner class, 8 p.m. to 9 p.m. Monday to Thursday. The link is there as well. In Kampala, Uganda, we do have physical workshops, 3 p.m. Monday to Thursday at our offices on Rumi Building, Lumumba Avenue. Feel free to sign up for them as well. Tanzania, we have a physical workshop at FNB House, Dar es Salaam, Monday to Friday, 1 p.m. as well. This same week on the Friday, Tanzania, you have a trade talk to be hosted by Prudence, of course. FNB House, Dar es Salaam, same thing. Don't forget to sign up for it and don't forget to be there as well. On Saturday this week, Uganda, Kampala, we have a trading masterclass, the Bani Center, just on Kampala Road as well. So the links are all down. Do not forget to sign up for them as well. So other than that, I think I would like to wish you guys a blessed day and a peaceful week ahead. Thank you for being a very good host, guest to this session. or on X, on YouTube, everywhere you're watching from, LinkedIn. I would like to wish you guys all the best, and until next time, cheers.